On today's episode, we are going to be talking about the different types of accounts that are there in the banks, and probably how to open any account that you want depending on the needs that you have. There's a question that was asked by one of my viewers about the different accounts that banks have, and probably how one can tell the kind of account that they should open, especially maybe if you're seeking to have a facility or to take a loan with a bank. So it's important to note that mostly the function of a bank is to collect deposits according to CBK. And mostly you find that people will bring their money to the banks so that maybe they can probably to earn interest. And also when your money is in the bank, it's out of danger, and in case, even if you have seen scenarios where banks have been broken into but customers did not lose their money. So that's why you find that most people prefer to to save or to keep their money with the banks. So today it's going to be a very short one because there are different types of accounts, but I'm just going to mention the major, and I think these are the accounts that most banks offer in Kenya. We have the current accounts or the transactional accounts. This is a type of account when the owner of the account deposits money, they can access it anytime that they want. For current accounts, we have both personal current accounts for people who who transact under their personal names. That's why it's called a personal account. It's more of an individual account, and the requirements that you need mostly for this kind of an account is just your ID, your KRA pin, and photo. And mostly nowadays in banks, they don't ask for passports. They take their cameras to do that. Then we also have the current accounts that are also business. We call them business current accounts. These are for people who are running businesses that are registered or that have permits. So in this case, if you are opening a business current account, you will need your ID, KRA, business registration certificate, and if it's a limited company, you will need the articles and memorandums. Nowadays we call them the CR8 and the CR12. And also maybe tax compliance for those with limited accounts. Not tax compliance, sorry, the KRA pin for the company, and also maybe board resolution to open an account. Those are registered limited accounts. But we also have the just the normal registered business. You can use maybe your permit or your business registration certificate to register your business. So for current accounts, you can find you will find most current accounts come with a checkbook. Or for a current account, in case you need a checkbook, you are able to access one. And in this type of an account, whether it's an individual, whether it's a business account, you can access funds anytime that you want. And for this account, mostly you find that there are monthly charges, because in any case that you want to access your money, you can have it anytime, you can withdraw anytime that you want. Also the accounts, some of these accounts come with an ATM, especially for the personal accounts, or even business accounts, especially those ones that are that are maybe you are the sole director. But mostly for the business, for businesses or companies with a lot of directors, it really becomes sometimes difficult to give them ATMs. And even mobile banking unless they have an agreement within themselves. um yeah, and mostly on the current accounts, you will find this the kind of account that people most people will use to make payments or to make purchases through writing of checks, and even withdraw. Most of the times you'll find that most of withdrawals in these current accounts normally happen through check leaves. Then, okay, for the bank charges, it differs from bank to bank. And why most of these current accounts have bank charges, it's because you can choose to withdraw your money anytime, despite all the services that the bank has offered you, despite maybe the risks, of holding your money, or depositing it today, coming for it tomorrow. So that's why you find most of these accounts have bank charges, but there are those ones with also zero charges. So when you're opening an account, because the current accounts, we have very different products, you see. Generally, current account is just a transactional account, but now coming down to banks, they have really many products under that category. So when you're going to open your account, you just need to talk to your relationship manager or whoever is opening the account for you, just to go into details and help you understand how each account operates. Then secondly, banks also have the savings account. Savings account is whereby the banks collect money from clients, and this is the money that they use to lend to other people, and for this particular product, you're going to find that most banks have a limit on it, like how many times maybe you can withdraw within a year. It's not the kind of account that you'll wake up and just decide, just because I have money in this account, then today I can go and withdraw this money. It has those features whereby maybe you can withdraw quarterly, or you can you sometimes you even find most banks don't even give ATMs or even mobile banking to these accounts, because it's a savings account. And why should you have an ATM or mobile banking on a savings account and you want to have a saving culture? So generally, that's why you find like most banks don't offer ATM and digital services to that specific account. Mostly these accounts, you find maybe they have a minimum balance, but rarely do they have charges. And for most banks, for these savings accounts, uh, they give from an interest of 0.5 to around 8%, depending with the current economic conditions or how the rates are seated. So that's mainly what determines the rates that one may get. Then there are also the money market accounts. I'm sure many people have heard about the money markets. There are banks that most banks have these accounts whereby you also earn interest or on those accounts. They have minimum balances, and for most of these accounts, if you don't fund them, they are closed down. There are penalties in case you withdraw before the period you had committed to to save your money. There's usually that penalty, though not a huge one, once you withdraw. Then we also have the fixed deposit accounts, or also called the certificate of deposits, whereby you fix your money for a period of time. You can choose to fix your money for 1 year, for 2 months, for 3 months, And also we have the call deposit, where you put your money on call, such that in case you need it, in case you have an emergency, or in case you have a project that is that you're planning towards, and you might need this money anytime, then you put it on a call deposit. And for fixed deposits, the rates are also different based on the amount. Of course, the higher amounts, the better interest you are going to earn. So for this particular product is for, you know, for people who want to make those, you know, investments. Yeah, and also this is the money also the bank uses to lend to clients, and that's why you also find the rates are different. You'll find that someone who fixes their money for a longer time is going to have better yields than someone, you know, who is just willing to fix their money for a month also. So generally those are the types of accounts. Maybe I don't think there is any that I have left out, and if there is any, of course I'll still clarify in my next videos. So for people in business, I think the best accounts to have is a current account. You can have a personal current account, or you can have a business current account, depending with the type of business you're doing, because these are transactional accounts. And for a transactional account, it means that there is money coming in and there is money going out, credit debits, and mainly that's what banks look out for when you are going to borrow anywhere. For those who are in business can agree that the first thing you're going to be asked when you get into any bank into any bank, the first thing they will ask for is a statement, because they really want to see how you've been, you know, you've been banking for the last 6 months, for the last 1 year. They want to see your history. So if you're in business, the best account that you should have is a personal current or a business current account that also has transactions. You know, it also has have to be, you know, very active. Like there has to be money coming in, money going out, because you also find there are people who use their current accounts for savings, and then after 6 months someone comes and tells you, I have 200,000 in my account, how much do I qualify for? Normally what happens in most banks, we normally take the annual turnover and just divide by 3 to get the ability. Generally that's the rule, you know, just the same way we have a third rule in those who are employed, we also have a third rule in those in business. So like assuming like in a year you did 6 million, you just need to divide by 3, just to, you know, to averagely gauge yourself how much you qualify for. For those who are in employment, I think the best accounts to have is the personal current account. And for for the personal current, you find like most banks have the salary accounts that really favor those in employment. And a personal current also can help you also get a facility depending with who your employer is. So for those who had asked about maybe the different types of accounts, I think now there's an overview of the different types of accounts that are there. And so it's good that you are able to know what are your needs even before you open an account. You should know, do I need this account for savings? Do I need this account for a loan? Do I need this account for an investment? You know, do I need this account for, you know, just transactions and running my business? Like you really need to identify why you need an account, so that even when you are walking into any bank, you already, you know, like you are able to tell them this is the purpose. You know, you know why you're opening that account. You know your needs. And it's okay to have different types of accounts. Like you can choose to have, you know, a savings account in this bank, you can choose to have a current account in this other bank, you can choose to have a fixed deposit, or you can even choose to have all those accounts in one bank, whereby in case you're in business, you are able to, you know, to track your transactions. From the same business, you are able to channel your savings to another account, and at the same time probably you even have an investment account for your long-term goals. You know, like you can have the 3 accounts just to help you monitor your cash flows and everything. So I think that's it for me, guys. We said it's about consistency. Keep the questions coming in. I'll be answering them the best that I can. And if you've not subscribed to this channel, kindly do. And thanks a lot for those who've continued to support my content. Thanks a lot, guys. Bye.